and welcome to this module of Wave the Scruff. In this module, it's a follow-up to the previous module of 3Click. What we're going to do is look at a basic way of grading a trade from A to D, and then how the scoring system works on the various indicators and why they're there in the first place. Now, just to give a kind of brief history of what 3Click is. 3Click gets its name because it is 3 baskets, with each basket having 3 time frames and each time frame having 3 points of interest. Now what this does, it creates a law of averages across the platform. Now you can just use +1 -1, which is a variation of 3Click, because again it's 3 time frames and then you use a 4th as a trigger sort of thing. But what we're trying to achieve with 3Click is the general sentiment of the market, and then try and figure out a timing of the market. Now, there are also different ways to grade, different ways to score, but we're going to give you a broad stroke and an easy way to do that. So one of the easiest things to do is to actually flick it over onto a chart, like so. We're going to be using the FTSE as the said chart to score out, and I'll talk it through as we go. Now the bias tool that we've been using, if I pull this into shot, is this one. Okay, now what it's essentially trying to achieve all the time is an average of what's going on. Now this particular sheet, you can do it with pen and paper, etc., is broken down from a monthly to a 5-minute chart. It does kind of have the close or the prior close on it, but we're really concentrating on this. Okay, so the first scoring section, or the grading section, is derived from the results. Now it works from the 15-minute to the day. So there are essentially 4 scoring points. And what it means is, if you had the 15-hour, 4 and day, all of them say buy, it's an A trade. If 3 of them say buy, it's a B trade. If 2 of them are saying buy, it's a C trade. And if there's only 1 of them, it would be a D trade. Now you can also have a rare occasion where none of them line up. In other words, they're all a question mark, and it would be F. So A is alpha, beta, C is risky, D is defunct, and F is just completely no good. But it's based on these 4 time frames: 15-hour, 4 and day. And obviously if you're looking for cells, it will be exactly the same in reverse. Okay, so let me start this ball rolling. Now the first thing that we'll be looking at is obviously your monthly chart. Now we'll take the drawings off for this scenario so you can see what's going on. And I'm going to use the FTSE because it actually shows different sentiments for the indicators as I go down through the process. Now for scoring, the easiest one is the MACD. And the scoring system is always the same. It's 1 for positive, 0 for neutral, and -1 for negative. And what that means is a positive is a buy, a negative is a sell, and a 0 is bang in the middle. Now in this situation, that would be scored as 0 because the 2 lines are sitting on top of each other. You need to be able to see space between the 2. Now if I drop this down, we'll start seeing it's still kind of 0. It's slightly to the upper side. And if I take it to the daily, it is now developed into a scoring of 1 because you can see clear daylight between the 2 lines. And until those lines have recrossed, it stays that way, because there can be situations where, like this, where it comes down to the line and then just continues to rise up, goes back to the line and continues to rise up, but it didn't turn until it fully crossed, and then the whole criteria started again. Okay, so on the monthly, in this scenario, that would be 0 because I cannot see any daylight between it. So that MACD would be a 0. Now I do look at the close as well, and the reason why I look at the closes is because I often say the chart will do what it's doing until it tells you otherwise. Well, the prior close will tell you what roughly is happening. It was buying on the last close. So we would mark that as a 1. Okay, very, very simple. If you have a doji that is so thin you can hardly see what it is, that was the only time it will become a neutral. Now the next sequence is, this is general direction. We're now looking for momentum. Now when it comes to RSI, people do get confused with this one, as they do with the Bolly, and we'll go through both in detail. There is what's called a broad stroke, there is the trigger, or there is hybrid. So there are 3 ways you can use an RSI. Now you either use a broad stroke or a trigger for the scoring, but the hybrid comes into play when you're looking across multiple time frames. Let me explain. When you're out on a monthly chart, this section can whipsaw backwards and forwards for months, like this is here. So it's down here, it's down, it's up. That upward move could be for 2 or 3 months. So what happens is you can actually get a bit confused with it. So what you're looking for is what's called broad stroke. And broad stroke is you just want to see that the market is an extreme. So in this case, an extreme in the high point here, where it's bought right up, would be -1 because there is a sell imminent. We're not sure when, but we know it's coming because it's in extreme. When it's between the 2 lines, in other words, in range, it is 0 because it's going to chop around quite a bit. And then when it gets down into the oversold, it will become 1 because there is a buy coming. So a score on this particular one would be 0. It's broad stroke. It's in mid-range. Okay. Now as we go down through the time frames, we'll see that change, and I'll explain the characteristics as we go. Then you come to the Bollinger Band. Now the Bollinger Band again can be looked at in a number of different ways. The main way is you are looking for the arms of the Bollinger Band, which is these outer edges, to either be closing in, flat, or pulling out. Now the way to work this out is the moving average. If it is above the moving average, the criteria is to the buy side. If it is underneath the moving average, the criteria is to the sell side. The caveat is, if it's been on the outside, we know the next testing point is going to be the moving average. So if the market is saying it is buying, you will be waiting for it to come to moving average to bounce off, and vice versa from the underneath. Now in this particular motion, that is exactly what's happened. It has been on the outside, it has come down to moving average, and it has found this as an area of interest and is now bouncing off, and we can slightly see that the Bollinger arm is moving up. Likewise, that's flattening down. Now at the moment, it's ever so slightly up, but the rule of thumb is if you can't see it, it's neutral. So in this particular instance, it would be neutral. So we'll just mark that as 0. So these are what's called broad strokes, and they're all broad strokes down to the 4 hour. Once we get into the hour and below, we're actually looking for triggers because that's where the action happens. So in the meantime, what we're trying to do is figure out what the market is up to. So we take it down into the week and we kind of repeat the process. So the first thing we look at is what was the last candle? it was negative. So that would be a -1. We're looking at the MACD. It is slightly to the upside. If I just widen that out slightly, you might be able to see it. There is daylight between the lines showing an upward momentum. Okay, so that would be a 1. The RSI, again, is broad stroking. It is between these two lines. It is 0. So that would be 0. Just like so. And then we come to the Bollinger Band. Now the Bollinger Band is now explaining why that Bollinger prior was very slight. It was flat at the bottom, showing there was no pressure, and we've been coming from the outside and it's closing in. So this particular Bollinger Band would be 0 because both arms are closing in on themselves. So that would be 0. So again, it's shown neutral biases in the high time frames. Take it to the daily, just like so. We can clearly see that's to the upside, and we can see it was a negative close. So it's a negative close, and that is to the upper side. The RSI, again, is mid-range, so it's 0. Then we're looking at the Bollinger Band. Now the Bollinger Band is in the upper quadrant. That's flared out. It is flattening, but that is clearly looking to the upper side. You can see that in this arm. So we're only looking for buy criteria at this point. It is up, and we're only looking for buy because the price is currently above the moving average. So the Bollinger Band is showing strength to the upside, which explains this, which is the broad stroke. So that is 1. So what we've got as a deep trend, the overall picture of the market at this moment in time, is it's quite neutral. In other words, it could go either way. Now, this could be for many reasons. The market could just be flat, but at the moment it's running all-time highs, as all the indices have. There could be a pullback on the horizon, but to trade in the moment, that is not enough. That's just an overview of what's going on. We're now looking to kind of see roughly what's happening today or over the course of the next couple of days. And that's where this basket comes in. So we're now looking at a daily, 4-hour and an hourly is the next set of baskets, which will create the double D. Okay. So we drop this down to daily, which we've been in. We've already established what's going on here. So we take it into the next time frame, and it's telling us that the last close was negative. Even though it's at the top, it's still negative because we're looking for law of averages. So it's a negative close. The MACD is clearly down, which explains that. But what you've got to remember is a MACD is a lagging moving indicator, which is why you need the momentum of the RSI and the Bollinger Band. Now, this is kind of subjective as to how you want to play this on a 4-hour. You can either start putting your triggers in, or you can leave it as a broad stroke. Rule of thumb is leave it as a broad stroke so you can just see an overall picture. So that would be marked as 0. So that's 0 because it's between these two lines. Mark that as 0. And then we look at the Bollinger Band. It's in the lower section, clearly pushing down and flattening out. Okay, so this would be -1. So if you're going to sell it, that would be the next bounce point. Okay, so but it is negative. Okay, so what we're starting to see now is building up a picture. That's buying, but this is selling. Now, there's not enough information for it to figure out what's going on just yet. We now start to look at the triggers, which will be the hour, and the hinge points are the daily joins these two together, and then the hourly joins them two together. Okay, so we'll come down onto the hour. We don't need to see what the last close was because we're now getting too close to the price and it becomes irrelevant. Now, the last close is here. So that would be positive. So we're not really worried, but what it does is you can start looking to see what the market's trying to achieve. So there has been a positive push up, and that is represented here inside the MACD, which is the only part that you place on the chart, on your scoring chart from now on. So that is up, and that's confirmed here. So that would be positive. Now this is where the RSI changes somewhat, because we now need to understand what momentum is really happening in the market right now. Not the general direction, momentum. Now the momentum is crossing the center line, showing upward momentum. So you have 3 pivot points. You have the upper level, the middle level, and the lower level, and they only get activated once they are crossed. So if you have an area like this where it crosses down into extreme, it doesn't activate till it crosses back to range. And that works the same with the center line as well. Because it's in range, it now creates the pivot point. So it's came down and it's come back in. The buyers have forced it back over the middle line, creating a 1. So that would be a buy. And then we look at a similar criteria with the Bollinger Band. Just move that down so we can see it. The Bollinger Band's price is currently below the moving average, so you're really looking for the arm on the sell side. It is flat. This one is also flat, making it 0. There is no strength left. Okay, so that would be 0. So the 1 hour is buying, which is your anchor chart. It's your main chart that you would look at throughout the day. Take it to the 15-minute. Pull this in. And we're going to go through the criteria again. You can see indecision in and around here with the last closes, which are there. But the major close was to the upper side. So there is a lot of buyers in there. And again, this is just a visual check, not a marking check. But why is that? Well, the MACD is clearly up, and the cross of this center line again is up. So you have 2 positives. Positive on the MACD, positive on the RSI. What is the Bollinger Band doing? Price is in the upper section, and the arm on that section is clearly moving to the upside. So that would also be to the up, just like so. So what we're starting to see now is it looks like it's buying. It could be a short-term pullback, or it could be the continuation of the double D, which happens to be buying. Drop this down into 5 minutes. And then what you have is we have neutral at this point, sitting on top of each other. Again, still buyers in there. You can see that from the last candle. But that is neutral. Come back to the RSI. It has created a trigger point because it went overboard, and has now crossed back into range, making it -1. Okay, now if you come to it and it's actually 0 and you're using triggers and it's in this point, it would be 0. So it's 0 in the overstretched, and the triggers are the cross of the lines. Okay, so it's crossed the line through, making it negative. So that would be minus. And then we come to the Bollinger Band just to see what's going on. The Bollinger Band is telling you a different story. What it's telling you is there's an upper move because the arm is stretching to the sky and the price is in the upper quadrant. Okay. So that is up. So what that's telling us, if we were going to be scoring this out, is it's a B trade because 3 of them are buying B. One of them's out of whack. Okay. Your main trigger point is telling you there's nothing going on the 5-minute chart. So in this instance, you would wait for an hour just to see what's going on. Now, if that was actually down on the 1, it's now telling you, well, hey, this is looking pretty good. The 5-minute is aligning itself with the hourly chart. Yes, it's a B trade and there's a relatively strong trade inside it. So we're going to take that back and we're going to go back to chart a second. So we'll just go back to chart. Now, in a situation like this, these two now don't take any notice for the next hour. What we're interested in is only the RSI. We have established what's going on. So what we would need to do is watch this come down, and you do it every 15 minutes, give it some time to breathe. It might take it 40 minutes to get down to here and then cross back in. And it would align itself, just as I've said there, where it now becomes a buy. And if it is pushing down, what you'll find is the higher time frame Bollinger Band, you will find that it'll find some kind of support on the moving average. And you would use this just to trail down till it gets to the point. Now, if it comes down and then triggers back up through, can give you your criteria. And what you would do from this point is you then start looking at what levels are close to the price, and they're your buying criteria. Now, from there, you just place a pending order and then target appropriately. And that's kind of scoring in a nutshell. So if I just put this back and I give you a quick recap of what's going on, you know it's the FTSE. Now you can see what the deep trend is doing here. It's actually neutral. So there's not a great deal going on with it. And that's because of the way that it's scored out. And you would use just a broad stroke for the deep and the double D. And that means with the RSI, you're just either looking to see if it's an extreme or whether it's in range. It's that simple. So the double D is telling you to buy. And then you've worked your way down to the trigger settings, and that's where the RSI changes, where you are looking at the lines as you cross. And that zooms right in to show you the momentum over the course of the next hour to 2 hours. And it is also buying. Okay. The status at this moment in time for the scores we've just done is no. So there is no trade. But it has signs that it's going to be a B trade. And if you are going to trade, you would look to go with the trend, like whatever's in this box here. And that would be to buy. So over the course of the next hour, you need your main trigger candles, which would either be this one or this one, depending on which one you work on, to catch up. Now the 5-minute is very easy because you can see it. Okay. And then when it catches up, that'll become yes, and away you go. Now there can be a criteria where it tells you to wait. And what that means is it's almost ready. Check it every 15 minutes and see if it catches. But the only chart that you change in the hour, once you've done all of this, the only time frame you change is the 5-minute. because it's the one that'll drive the rest of them. And it can take it about an hour for these settings to change, so there's no point changing them. And then at the top of the hour, you reset this lot to see if it works. And then that's your trigger. And that's it, guys. So you just need to keep an eye on the 5 minute once you're in. But if it says no, there's no point doing it. You just wait till the top of the hour and do it again. If it says wait, change that every 15 minutes and you'll be fine. And that's it. So I hope that one helps. The scoring is relatively simple. Grading is A, B, C, D. And it's literally 4 of them's A, 3 of them's B, C of them is, or 2 of them is C rather, creating a risky buy, and D is just terrible. Okay. And then when you come to score out, if you're looking at high time frames, you really just want to be broad stroking, guys, because it takes so long for the changes to come into effect. You can't really nail it down. And then when you come down to your 4 hour and below, you can start triggers. But even the 4 hour can be a little bit long. So you can just have a nice broad stroke so you can see what's going on. And then when you look at the hour into the 5 minutes, which is where you're going to get your information from, use it as trigger points. And you'll find that the trade zooms in that little bit better. So I hope that helps. And I'll see you on the next one.